My name is Precious Diana Valenzuela, and this is my accounting project. Chapter 16 is the introduction to managerial accounting. So the importance of managerial accounting is that it focuses on the accounting tools that managers use to run a business. Managers would also need to plan and control operations in their business. Planning means to choose goals and decide on how to achieve them. Budgeting means to coordinate business activities using a financial plan. And controlling means to implement the plans that were made and evaluating the results of the business operations. This can be done by comparing the actual results of the budget. There are three business types: service, merchandising, and manufacturing. A service company does not sell products. They sell time, skills, and knowledge. Some examples of service companies are accounting firms, phone companies, and cleaning services. Service companies seek to provide services that are high quality with reasonable prices and timely delivery. Merchandising companies resell products they buy from suppliers. Merchandisers keep an inventory of products, and their managers are accountable for the purchasing, storage, and sale of the products. Lastly, manufacturing companies use labor, equipment, supplies, and facilities. In this type of business, managers are especially important because they use these resources to create a product that customers would want as well as at a price they are willing to pay for. In other words, they are responsible for generating profits and maintaining positive cash flows. In this problem, we need to determine the business type. I have here Company A and Company B. Are you able to determine what type of companies these two businesses are? The answer is below. Company A is a merchandising company because they have merchandise inventories as well as net purchases. Company B is a manufacturing company because they have finished goods inventories and have a cost of goods sold manufactured. Now I have here problem 2, which is calculating the COGS. COGS means the cost of goods sold, and it is important to calculate this because it is linked to the profit of the company. Profit is important for the company to grow, and the formula for COGS is using the beginning inventory, then adding the cost of goods purchased or manufactured, then subtracting the ending inventory. We will be calculating the COGS using Company A and B from the previous slides. To calculate the cost of goods sold, we must first look at Company A. The beginning merchandise inventory is already given to us. We can find that number in the beginning balances column under merchandise inventory. So I just plugged in $11,600. Purchases is also given to us. It is found in the net purchases column, so I just plugged in $155,500 in there too. And then we have to find the CGAS by adding the beginning merchandise inventory and the purchases together to get $167,100. CGAS is the beginning value plus the cost of goods purchased, just like in the formula. Now, in order to find COGS, we need to find the ending merchandise inventory. That is already given to us. It is found under the ending balances column under merchandise inventory. So I just plugged in $14,100. Because we need to subtract that, in accounting we use parentheses to indicate a negative number. Therefore, the COGS for Company A is $153,000. Company B is a bit different because it is a manufacturing company, so we have to calculate the finished goods, but it is the same concept. Beginning finished goods inventory is found under the beginning balances column under finished goods inventory, so I plugged in $16,400. For Company B, we call this the cost of goods manufactured instead of purchased because this company is a manufacturing company. So that is found in the cost of goods manufactured column. So I plugged in $209,500. Then again, we would have to add up both, which equals to $225,900 for CGAS. The ending finished goods inventory can be found in the ending balances column under finished goods inventory. So I plugged in $13,100 with a parentheses to indicate a subtraction to be done again. Now the COGS for Company B is $212,800. I really thought this was a good chapter, especially since I learned about the different types of businesses out there that do similar accounting steps to ensure they have a successful business. Thank you for listening to my presentation.